All right, good morning, everyone, and thank you for joining us today for our webinar, Financial Support for Small and Medium Scale Businesses. Before we begin, I'd like to thank EY, Flexingate, Nutrien, Prasad Employment Law, and RBC, our presenter today, for sponsoring the CAMSC Business Intelligent webinar series. These webinars are focused on supplier development, and by sponsoring, CAMSC can provide education and skill building assets to our network. Our speaker today is Herb Zobell, the Vice President of Commercial Financial Services, Indigenous Banking for Manitoba, Saskatchewan, Nunavut, and Western Ontario. Herb values the strong working relationships he has developed with the First Nation governments, organizations, and businesses throughout the region over the past 20 years. With a 4-year Bachelor of Commerce Degree from the University of Lethbridge in Alberta and a Master's of Business of Administration degree from the University of Calgary, Herb is a member of the Ahtahkakoop Cree First Nation himself. Herb has over 27 years of commercial banking and First Nation government experience. Prior to joining RBC, Herb worked in management of First Nations in Alberta and consulted with several other First Nations in the province. Before handing the reins off to Herb, I would like to note that we have all attendees currently muted. However, if you have any questions during the webinar, please enter them in the chat or in Q&A, where we'll select several to answer at the end. This webinar is also being recorded to be used as a resource made available afterwards. So with all of the announcements out of the way, I'm going to be handing the reins off to Herb. Herb?
Thanks, Roy. Good morning, and it's a pleasure to be here today presenting to the CAMSC members. This is not something I normally do in my day-to-day job at RBC, especially the topic, but however, as you all know, nothing's normal these days. As Roy said, my name is Herb Zobell, and I am a VP Commercial Markets in Indigenous Banking in Saskatchewan, Manitoba, Western Ontario, and Nunavut. I lead a team commercial account managers who deal with First Nation governments, their businesses, Indigenous non-for-profit organizations, and public sector organizations, and I guess any combination thereof. I have counterparts in Western Canada and Eastern Canada, and we all seem to work well together as a team. I currently reside in Winnipeg, Manitoba. I was in Ontario for 18 years, and prior to that in Alberta. And I have worked with RBC for 25 years, and it's a pleasure to talk to you today. If you are all, like most people, I'm sure most of you have been greatly affected by the COVID-19 virus, along with the effects this virus has had on the economy. The last few weeks have been marked by ongoing progress to fight, to contain the spread of the coronavirus and work hopefully towards restarting the global economy. Positively, the trend of decelerating new case counts across countries like Italy, Spain, and Germany continue, and that enabling them to slowly ease certain lockdown restrictions. Meanwhile, there's some encouraging signs that North America may be close to entering this new phase, though it feels premature to say conclusively at this point. There remains other countries, though, like United Kingdom, France, Turkey, India, and Brazil, for example, where the new case count has not shown evidence of slowing. Furthermore, a few other countries recently, Japan, Singapore, for example, have seen re-acceleration in cases, forcing an escalation of restrictive measures. Nevertheless, the question appears to be gradually shifting from when will we see a peak in the rate of daily new cases. To when, how, and to what degree will the lockdowns and social distancing measures get lifted? As you're all aware, the US federal government unveiled a three-phase approach to easing its restrictions with guidelines and case trends and testing criteria. It's confirmed it's up to the US state governors to decide when and ultimately how to take action. So the progress is encouraging given the outlook was relatively bleak just a few weeks ago. But it remains to be seen how quickly people's behaviors may return to normal until effective treatments or vaccines are readily available. On this front, there have been some encouraging developments, but as well it's likely too speculative at this point to make any conclusions. As most of you are aware, in March, oil prices fell dramatically as a result of the combination of the pandemic and the standoff between two of the world's largest oil producers, Saudi Arabia and Russia. Again, yesterday they fell again. The price of a barrel of U.S. oil for May delivery plunged below $0 US. So recently, though, under meaningful pressure, those two countries, along with a number of other oil-producing countries, came to an agreement, which is the past few weeks, on coordinated production cuts that hopefully last through 2022. The market's reaction, though, was muted as investors are rightfully preoccupied with weak demand that is occurring as a result of the global economic lockdown. As I'm sure you're all aware, nobody's filling their tanks these days. But this agreement is very important in that it should help avert a worst case outcome, breaching the global storage capacity that could have resulted in even greater pressures on oil prices. It appears it is continuing in that direction, though. Last week marked, the start of the first quarter earnings seasons. Expectations are low and even worse for the next quarter, given anticipation the global economy weaknesses may persist for probably the bulk of April, May, and June. U.S. banks were the focal point this past week as several of them reported results, and unsurprisingly, they were not good. Most are building large reserves of capital in anticipation of future loan losses as unemployment rises and business customers may have difficulty repaying outstanding debt. Fortunately, the North American banking system is much better capitalized compared to the last recession, which should help them weather this storm. The challenges for investors and bankers lie in trying to assess how long this one may last. Should it extend beyond the month of June, more reserves may be needed. In terms of RBC, I believe we're in a strong position, both in terms of capitalization and liquidity. The supply and demand for money has affected borrowing rates recently. Fixed borrowing rates did actually increase slightly. The whole economy has suffered. The government has come out with programs to assist with covering the non-discretionary spending. Unfortunately, the discretionary spending, which is approximately a third of the spending, has reduced up to, by 70 to 100%. These are things like restaurants, concerts, gym memberships, sporting events, all the things people do in their pleasure time. I'm sure some of your businesses may have been affected in this reduction. It is odd to see some of the areas of the market that have either reduced or increased in business during this COVID-19 period. Apparently, yeast sales are up 600% year over year. People are baking more. Flour producers can't source enough small bags to replace the industrial-sized containers they use to ship to restaurants. Chicken processors are suffering without restaurants buying their fingers and wings. Seafood producers are suffering as they historically count on 70% of sales to restaurants and as a result are shipping as much as possible to Asia. Dairy producers are suffering as they no longer have restaurants and coffee shops buying as much cream. Potato farmers lost industrial markets for fries and wedges. So as we get As we move on, new information is always being produced, but also as we get into the farming season, the Canadian farmers employ up to 60,000 foreign workers, which obviously won't be available this year. So I'd like to get into an overview of some of the government programs that are available to support both employees, meeting payroll, remitting taxes. Then I'll focus on some of the loan and credit programs that are also readily available, and then we'll kind of wrap up quickly what RBC has in terms of some of the client relief, similar to most financial institutions. All this information is available online, and I'm by no means an expert. However, have been required to become somewhat aware of what is available, and will provide a brief overview of each as best as I can. Most of you are aware of the Canada Emergency Response Benefit Program. This is in place to provide support to those employees who are being displaced due to COVID-19, whether it be unemployment, being sick, quarantined, or in self-directed self-isolation, and people who are unable to work. So this replaces the previously announced emergency care benefit or the emergency support benefit. It came up with the CERB acronym. So it does provide income support to individuals via a taxable benefit of $2,000 per month per eligible employee for up to 4 months, where there is loss of income due to COVID-19. There are some criteria around it. Canadian resident, have a social insurance number. Unemployed due to those reasons previously mentioned. Stopped working for 14 days within the initial 4 weeks, and made at least $5,000 in income in 2019. The program does not replace EI and is meant to address individuals that do not qualify for EI. I'm sure many people have utilized this program. I believe 660,000 just within RBC alone. They are applying online, and it's directed either through the employer with a record of employment, or online. Most CRA sites and banking sites have a link. There are some programs that assist employers with meeting payroll and keeping staff employed. One being the Canada Emergency Wage Subsidy. This is eligible to employers who drop in gross revenue, who show a drop in gross revenues, obviously due to the COVID-19. Wage subsidy to eligible employers for up to 12 weeks of remuneration paid, retroactive March 15th through June 6th. Companies can apply for 75% of the first $58,700 normally earned by employees, representing a benefit of $847 per week for up to 12 weeks. Eligibility: the employer needs to demonstrate a 15% drop in gross revenue in March and 30% in April and May compared to 2019. The applications you can apply online and at CRA My Business Account portal, and there is a link on this site here. Those organizations that do not qualify for the Canada Emergency Wage Subsidy on the last slide may continue to qualify for the previously announced wage subsidy of 10% of remuneration paid from March 18th to before June 20th, up to a maximum subsidy of $1,375 per employee and $25,000 per employer. So eligible small businesses do not need to apply for this subsidy. However, they will be able to benefit immediately from this support by reducing their remittances of income tax withheld on their employees' remunerations. So businesses also don't need to demonstrate a drop in revenue in order to qualify. So in essence, the funding comes from you not sending in remittances. You can, there is a link there as well for those interested in learning more. These are, again, are all on the CRA website. Then there's the work sharing program, which helps avoid layoffs when there is a temporary decrease in business activity beyond the control of the employer. So the program provides EI benefits to eligible employees who agree to reduce their normal working hours and share the available work while their employer recovers. So this program has been extended from 38 weeks to 76 weeks to help employers during this downturn. Again, there's a link for this program. So this, the government has also made changes to income tax filing dates and deferral of GST, HST remittances, and custom duty payments. You still have to pay these income taxes owing for business. However, the government has deferred those taxes owing on or after March 18th until August 31st. As you can see on this slide, there's also the custom duties, sales tax, and those can be deferred until June 30th, 2020. And the links again are on the slide. So this is just a quick summary page of the above programs for support for employers and related employees. The CERB, the Canadian Wage Emergency, Canada Emergency Wage Subsidy, and the other programs. Now I would like to get into some of the loans and credit support available to businesses due to the COVID-19 issue. We're now also, as you really realize, these programs are constantly changing. We continue to get updates, minor tweaks to them. The first program I want to talk about is the Canada Emergency Business Account, CEBA. This is, I'm sure many of you are aware, and if not, it is directed more for the smaller end of business, although it's not restricted. This is a $40,000 loan that is being made available by financial institutions. However, approval is done by the government, and it's to help cover operating costs for those small businesses affected by COVID. The way it is administered by financial institutions and credit unions, they provide some sort of line of credit or a revolving loan of up to $40,000. Most people apply, they get the $40,000. Those applications are being processed currently. Last I heard that we were over $7 billion in this type of program. Canada-wide, RBC is probably over $2.5 billion at this point. So that these dollars are flowing out. You do enroll with your primary bank or credit union, and your deposit account and business account has to have been registered and operational on or before March 1st of 2020. The business cannot be a holding company, and the business's payroll expense had to be between $20,000 and $1.5 million in 2019, and this was evident by your T4 summary that was submitted. It was originally 50 to $1 million, but they've recently tweaked it to 20,000, and they've made some other changes as well, but the latest is the 20 to $1.5 million. This loan is a no interest facility, and that no interest period goes until the end of 2022. And then commencing on January 1st, 2023, interest starts to accrue at a rate of 5% with the interest being paid monthly. So the way it works is any outstanding balance on this loan on January 1st of next year, January 1st of 2021, with RBC, that facility is being flipped into a term loan, a 5-year term loan on January 1st, 2021, with a maturity of December 31st, 2025, in which the balance must be paid in full. However, if the client pays 75% of their balance of their term loan before December 31st, 2022, the remaining balance of their term loan will be forgiven. So for example, 40,000, you pay off 30,000 by the end of 2022, the remaining 10,000 is forgiven. If you don't obviously repay that 30,000 before December 31st, 2022, the full balance and all accrued interest starting at that point will be due and payable on December 31st, 2025. Again, it is the approval is controlled by the government, and the rules seem to be slightly changing, but they are available now at your financial institution, your primary financial institution. And these facilities most likely will show up on your online banking, whatever platform you use, but it is available, and the facility is fully government guaranteed to the financial institution. So they are being used, and that seems to be a good initial and quick way to get some cash. The turnaround time seems to be within a week, and once someone applies to get their money. The next program is the under the Business Credit Availability program. The next two programs actually fall under the BCAP program. The first program is a new loan guarantee for business by Export Development Canada. One would historically only deal with EDC if they were in business with exporting and importing. However, their mandate has been expanded for this program. This is essentially a temporary cash flow loan for 12 months, and the business may qualify to be extended, a second 12 months. Let's find my notes on this one because it's a fairly new program. The facility is subject to standard underwriting by the financial institution, and facilities can go up to 6.25 million, and it is interest only. Each financial institution that administers the program will have some sort of cash flow projection tool to assist in determining the authorized amount of the business. Funds are to be used for operating expenses, like payroll, rent, utilities, interest payments, etc. And both of these programs are processed through your primary bank, and this loan is currently available with many FIs, including RBC. We just started this, but the company does have to qualify, and hopefully they were in fairly stable shape before the COVID-19 hits, and the expectation is that they will be able to pay off the loan, whatever portion they do qualify for, before 12 months, and if case warranted, it can be extended another 12 months. That is interest only, as I said, with a bullet payment at the end. EDC, there is a fee that's paid to EDC for the 80% guarantee to the financial institution, and it can be deferred up to 6 months. This program is still, being developed. Certain organizations cannot apply or are excluded, being obviously government organizations, charitable, religious organizations, unions, any kind of political office. The funds, again, have to be used for operating expenses. It is a short-term, basically Aboriginal and a temporary loan to assist with operating expenses. And post-COVID, EBITDA has to be 1-to-1, and it can't be used for things like, dividends or growth plans or shareholder loans or executive compensation. or the repayment or refinancing of debt. So again, this program is very new, and we're all learning, but it is available now, and it is being, we are starting to see applications, and I would recommend you obviously talk to your banker if you're interested. The second program is a co-lend facility, and it currently is still being developed, but it is on the verge of being released, hopefully by early May. And it's by Business Development Bank of Canada, BDC, and your financial institution. The loan amount available is scaled against revenues of the business. For example, if your business is under 1 million in revenue, then the business would qualify for up to 312,500. If between 1 million and 50 million in revenue, then they would qualify for up to 3.125 million. And obviously the large organizations with over 50 million in revenue would qualify up to 6.25 million. Most financial institutions would have a loan sizing guidance tool as well. It's not just a flat fee or a flat amount like the 40,000, but it is subject to the need of the company. The program, although it says up to 20 years, that is discretionary, up to the financial institution. Will obviously restrict to their own policies. And this was, again, the original notes. It seems to have been maybe scaled down to 10 years. Again, it probably only makes sense. A cash flow type facility like this, 20 years is probably too long just for cash flow, almost like a consolidation type loan. However, each FI will have their own policies for the working capital type loan, and it may be, preferably paid off within 5 years, maybe up to 10. Again, it is underwritten by the financial institution, and there is a potential for some businesses up to 20% personal guarantee, very similar to the Canada Small Business Financing Loan that's been available for years. The same organizations are not eligible. The government grant funded organizations, government organizations, the unions, religious organizations, charities, so forth. And each interest term is set individually based on each client. I believe it's interest only for the first year, and then reverts to principal and interest payments thereafter. This should be, as I said, available early May, and there is tools available to determine the amount. Normal security is used, general security agreement, potentially personal guarantees, and the post-COVID EBITDA is 1.1 to 1. So there has to be some, obviously some ability to service this projected after the fact. Again, it is new. I believe 80% of the loan is administered through BDC and 20% through the financial institution. The whole facility is administered by the financial institution. I'm just not exactly sure where the debt sits on whose book, if it's BDC for 80 or all of it through the bank with a guarantee. So those are the two BCAP facilities. There are other programs out there, many programs that exist that have been developed or are being developed. And there's probably more. For example, I know the provinces have some of their own programs. Ontario has government programs with Fed Develop Ontario and FedNor, and the cities have some. Western Economic Diversification Canada has programs. So each province, you would have to go look up their own programs. The feds are working with the provinces for a commercial rent relief program. Again, this is on the CRA website. I'm not sure if it's been developed completely yet, but there are other programs that exist for various organizations and industries: supply chain, agriculture, fisheries, and aquaculture, airports, broadcasters, tourism operators, northern air carriers. So there's, again, this is all very fluid, and if if you feel that your business may qualify for some of these programs and you've been affected by COVID, then I would recommend you ensure your business financials are up to date. You have projections and cash flow statements, and hopefully have a post-COVID plan on how you'll be operating after this is all over. All FIs will require this information when applying for these various programs, and so it's better to be prepared. Again, as I said previously, some of the financial institutions do have a cash flow spreadsheet that they've been sharing with their clients to assist them with projecting their cash flows and what their need would be. And so, again, I recommend you communicate with your financial institution if you are interested in these programs. In terms of each individual FI, all I can speak for is RBC in terms of what we are doing for our clients, and it's very public knowledge. It's been advertised all over. If you happen to have accounts with RBC, they're blasting out the information on all online or RBC Express banking, applications. But in terms of the personal finances, some of the day-to-day pressures on the relief being provided, we're deferring payments on mortgages, or installment loan, auto loans for up to 6 months, providing access, obviously, to the skip payments through the online banking. All these deferrals will not affect credit scores, and there are alternatives on the personal side as well. Personal plan can be developed with your advisor to relieve financial pressure one is facing, and there may include reducing credit card interest charges, payment deferrals, and so forth. Refinancing and credit structuring is also available. Obviously, we kind of prefer to wait till the end of this is over to figure out what's required. In terms of the business side, the commercial side, payment deferral, by conversion to interest-only payments for a period of time on term loans, commercial mortgages, and any kind of commercial leases, capital leases, or whatever kind of financing you have in place. Commercial account managers across the country are given authorities to increase temporary limits on operating lines and overdrafts to assist clients through this period. Also, waiving setup fees on the enrollment of any kind of cash management or remote check processing solutions. RBC is very digital focused, and we have the tools to assist businesses through this time, and you'd be surprised how many are now starting to utilize these, even though they have been available for years. The waiving of business and commercial card minimum payments for a period of time is also available, and the same interest charges on credit cards is being reduced. So there are lots of programs out there, and I know this doesn't cover all of them, but it is kind of a quick overview of some of the programs out there, and I do encourage you to go online and search out programs that hopefully would fit your organization if required. And I do want to thank you for the opportunity to present to CAMSC today. As you know, diversity and inclusion is core value at RBC, and this commitment extends to the supplier community. As a major purchaser of goods and services, RBC recognizes and the tremendous impact it has on the supplier community where it operates, and conversely, the supplier community's impact on the products and services that RBC delivers. So at RBC, we do strive to have an inclusive supply chain. Our goal is to advance equality of opportunity to businesses owned by Aboriginal people, women, minorities, LGBT, people with disabilities, and veterans by providing equal access to procurement opportunities to qualify diverse suppliers. We enhance the levels of quality, service, and overall value to the organization. I'm not sure if some of you know, but our global supplier diversity program has been led by Karuba Sankar, who's also on the line at RBC Global Procurement. So there is a link on this last page that does have where you would go to learn more about our program and register to be a supplier. So that, Roy, that basically ends and presentation at this time. Not sure if there is questions.
So thank you so much for her presenting today, and thank you to all of our attendees for participating. Questions can be posted in the chat and will be selected to be answered now, and follow-up responses, if required, will be provided after the webinar. If you would like to contact Herb directly, you can do so at herbertzobell@rbc.com. But if you have any questions, please let us know in the chat right now.
See, I do see one on here. Is RBC's loan forgiveness regarding the 40,000 loan and credit support unique, or could suppliers expect similar programs from other financial institutions? No, that program is across the board. All financial institutions, Schedule 1, Schedule 2 financial institutions, as well as credit unions, do administer that program.
Lovely.
The second part is if the BCAP program changes after someone applies, would they have to apply again? I don't believe so. Once you've applied, you should get some sort of a notification that it has been accepted, and you would hopefully hear. I believe there is an escalation process in the event a business isn't approved, if you disagree with the government's assessment. But once you've applied, you don't have to reapply.
Okay, so there is a question here. Is the technology keeping up with demands, and what immediate solutions are needed for current blockages? Asked by Susan.
Technology, the biggest problem seems to have been bandwidth these days. Everybody's using up the width, but the technology does exist. It's amazing how quickly RBC has got into the whole remote. Just for example, before we started this whole thing, we probably, out of our 80,000 employees, I think we had about 15,000 working from home or mobile type bankers. Now we've actually got up to 75,000 employees working from home. So approximately 90% of our employment is working from home. Some of the interesting stats, though, the branch traffic in our branches has dropped by 60%, which is expected. Point of sale usage through like terminals in stores is obviously down year over year by about 30%. ATM, the banking machine traffic is down by 65%, but the amount of money being taken out of those machines is up year over year by about 45%. So it's interesting to see the changes in the way people interact during this time. But the technology, RBC definitely prides itself on being ahead of the game as a digital bank. We have been able to stay on top of it. The biggest challenge is getting our clients up to speed quickly, and so it has naturally created a backlog in our tech group. the team that supports setting up clients with the online type banking or RBC Express, or these Check Pro type terminals, which allow businesses to deposit checks by scanning them in for large amounts of checks.
Okay, so in that case, with technology and people working from home, do you think that there's a need for training now, with regards to people now having to set up their remote workspace?
Yeah, we have a number of large call centers that have, to meet the, the social distancing formats, we've had to spread them out to different locations and at home. So the training is they should know their job is just doing it at a different location. We had to obviously ramp up on laptops and those types of tools that they may not have had previously, but we've seemed to be keeping up as far as I'm aware of. And the technology advancements that we've been working on that we would expect to roll out in the next 5 years have been rolled out in like a few months. So it's definitely made all financial institutions step up with this.
Lovely. So in this case, I'm going to be switching over to the Q&A because we do have a few questions in there as well. A question from Poonam is the business credit availability program for import as well, or is it just for exports?
The EDC program, I'm assuming, is what you're referring, is available for any business. It is not limited to importer exporters. Again, EDC has expanded their mandate for this purposes, so the name is kind of deceiving, where one would only deal with EDC if they were in that business. But those programs are now across the board. And again, the restrictions I had indicated were more of a government organizations or charities and so forth that are excluded. There are some restrictions by FIs, for example, like marijuana type businesses and so forth, but they wouldn't be financing. The rules are not changing in terms of what a bank would finance. It's just the products are changing slightly. They are available for all businesses, and these programs are stackable, meaning that if one would qualify, they can apply for the BDC, the EDC, and the 40,000.
Okay, so in that case, you're not just limited to one program.
No.
Okay. That's fantastic information. I know that quite a few of our suppliers, they would end up qualifying for more than one of these. So another question being asked, this one about the BCAP, is does the requirement of before March 1st account holding apply for the BCAP as well?
The March 1st, I believe, is across the board. The BCAP definitely, it is, and that's been an issue. So we're still learning, because some businesses actually have changed financial institutions from March 1st to when this hit. So right now it is as of March 1st for both the BCAP and the CEBA. But again, that may change. But it does have to be administered through your primary institution whom you have your relationship with. If the business just started, after March 1st, for example, chances are they probably won't qualify. But again, that may change.
Okay. So right now it's a bit of a gray area for if a business that started before March 1st but ended up switching banks, financial institutions.
Well, if they have an account, the RBC's policies, you have to have had an account with RBC on March 1st, been in good standing, your business has been operating before March 1st. So if somebody moved banking after March 1st, there may be an exception process, but from what I understand, they're encouraging, the policy is around your primary bank. So it is still, like you say, a gray area for that for those businesses that may have switched financial institutions after March 1st.
Okay. So that will hopefully be cleared up in the coming days, in the coming weeks. It's not an often case, but it does end up happening.
Right.
I'm seeing another question here. I think it's more just a confirmation for the 75% wage subsidy. Do you happen to know when that would be available? Or is that available
Um,
right now?
that is available right now, as far as I'm aware. That is, again, all done through CRA website. As you've seen in the media, a number of businesses have started up, rehired their employees, large organizations, to take advantage of some of those wage subsidies. So as far as I'm aware, you would have to talk to your accountant. That would be the best person to talk to. But I believe those are available now.
Okay. And just so that everyone is aware, all of the links that were in Herb's presentation, we will also make available in a separate document or along with the presentation on the website. So you won't have to go hunting for it too much. We do have time for just a few more questions, if that's all right with you, Herb.
Sure.
So one question that I see here is that we ended up, Herb, you ended up speaking a lot about support programs available to businesses. There are some businesses, however, that have actually ramped up their infrastructure during COVID in order to respond. Are there any sort of loans available for a business doing such activities?
You mean they've kind of tweaked their business plan and they've ramped up to accommodate COVID. I think those programs are, again, any kind of financing required for normal business or businesses changing direction a bit during this time. That's between, those are always available. I guess there's no specific program is what I'm saying. That's just normal financing requirements that businesses require, and those would be handled through your financial institution. Hopefully your relationship account manager would be open, and that's just normal business. There have been a number of businesses that have tweaked their production lines and so forth to accommodate the demand right now, and in fact have been having increase in revenue in some cases. So again, that's just normal bank financing. Hopefully you would communicate with your banker for those needs.
Okay. So while for COVID-19 there are support programs in order to help a business, if you were to expand your business during this time, just because it's in order to respond to COVID, that would be handled through normal means. It isn't a special process that
Yeah,
someone has to go through.
no, these programs are specifically in place to support those businesses affected by COVID-19, I guess, to the negative.
Okay. So everyone, I believe we will be shutting questions down after this last one, but if you have any other ones, you can let us know. Our last question for today will be, how long does it take for the SIBA loan to show up in online banking after receiving an approval email from RBC?
They're saying 5 business days approximately. They should be showing up. I know the week that they turned it on, which was a few weeks ago, I believe Thursday, I'm not sure if it was the 19th or the 26th, those companies that applied on that day had their money on the Monday or Tuesday. So if you haven't received confirmation within 5 to 7 days, then I would reconnect with your bank. Again, that's Schedule 1 banks. I can't speak for credit unions, though I know there has been some delays in some of the credit unions just given the technology, but the Schedule 1 banks, it should be within 5 to 7 days.
Okay, well, thank you very much, Herb. So everyone, our next webinar will be focusing on maximizing the local supply chain, to which we have more information on our website regarding that webinar. As we settle into new routines and processes, CAMSC will continue to ensure we're providing you the most important information, development, and support tools. If you have an idea for a webinar, you can contact me by phone or email, and we can discuss where it might fit into our schedule for events. Finally, I'd like to once again thank our speaker, Herb Zobell, and well as our webinar sponsors, EY, Flexingate, Magna, Nutrien, Prasad Employment Law, and RBC. With your support, CAMSC will continue to bring supplier development to the network by as many mediums as possible. Thank you very much, and have a lovely afternoon.